Good morning. My name is Anna Szczerba and I'm a director of the Company Law Department at TGC Corporate Lawyers. I'm very pleased to welcome you to our webinar on doing business in Poland. I will conduct today's meeting together with Marta Cyganik, Tax Director at Crow, and Agata Nierzechowska, Tax Director. During the webinar, we encourage you to ask questions via chat. If we do not manage to answer them, we will contact you after the event. We will also provide you with a recording from the webinar. I would like to start by inviting you to take part in a short survey and answer 2 questions. Okay, we will wait. Okay, thank you very much. So I can see that some of you are conducting business in Poland already. Some of you are just planning within 6 months, 13%. And for now, and some of you just for now would like to learn more about doing business in Poland. So I'm very glad that I will be able to help you with information regarding conducting business in Poland. Okay. So let's start with our webinar. I already said who will be running this webinar today. And now I would like to tell you about agenda. First, I will tell you a brief description of the business forms. Then we will say something about employment in Poland. Next part is accounting, then taxation in Poland, IP box, R&D tax relief. Brief description of the business forms in Poland. So in Poland, the most popular way of conducting business is form of limited liability company. And the purpose of the company can be any business purpose allowed by law. Usually it is used for small or medium-sized businesses. The second, not so popular, but our clients are asking us very often about this kind of business, is branch. So a branch is conducting activity only within the scope of activity of the foreign entrepreneur. So usually it is used by foreign companies which do not wish to establish their corporate presence in Poland. The difference between the limited liability company and branch is in legal personality, because limited liability company has legal personality and the branch does not have legal personality. This is the first difference. Who can be the founder of the limited liability company? One or more individuals or legal persons or organizational unit without legal personality which was granted a legal capacity on the basis of a specified act. Branch can be formed by foreign entrepreneur. The share capital is only required in the limited liability company. The minimum share capital is 5,000 PLN. It can be, of course, higher. However, in branch, the requirement regarding minimum capital is not applicable. Business forms, this is quite important slide because this says us about governing bodies of each entity. In limited liability company, the most important body is shareholders meeting. The second body is management board, which is consisting of at least one person, and here Polish citizenship is not required. In some cases, supervisory board is required, but generally it is not obligatory. And limited liability company may also be represented by a commercial proxy, which is a very wide way of proxy, also entered in the National Card Register. In branch, we have representation by the management board of the foreign entrepreneur. And also in branch, there must be appointed branch manager who is kind of white proxy and also signs document on behalf of the branch. In relation to accounting, full accounting in Polish is required in both cases. So accounting requirements are pretty similar. However, here I will just briefly mention about the end of financial year, because in limited liability, the financial statement must be approved by the annual general shareholders meeting. So the financial must be approved and submitted in the card. However, in branch, we only submit the financial statement of Polish branch, and we ask our clients to give us statement or information that the accounts of Polish branch were approved by the mother company. So the procedure is a little bit simpler. Liability. This is also important part of this presentation, because in relation to limited liability company, the company is liable for its debts and obligations with its whole property without any limitations. The shareholders are quite safe because they are not liable for the company's obligations. They bear a risk up to the value of shares taken up only. And directors bear personal liability for the company debts and obligations if they do not comply with their legal obligations. In branch, we have different situation. Full liability of a foreign entrepreneur. A person representing a foreign entrepreneur in the branch office is not responsible for the liabilities of that branch, and the branch representative, so branch manager, does not bear liability for tax liabilities of the branch. So this is quite important difference when we have branch manager here in Poland enter in the Polish card register and management board of the Polish company in relation to limited liability company. Incorporation. This is really very brief summary of incorporation. If you would like to receive more information, I'm inviting you to send me email. However, I will tell you briefly about limited liability. So the following is generally required for creation of a limited liability company: conclusion of articles of association, contributions to share capital to be made by shareholders cash or in kind, appointment of management board, supervisory board in some cases, and registration in the National Card Register. This is from this corporate side, the first step. And in branch, we need to establish a branch. We need resolution on establishment of the branch office in Poland. In most cases, this is resolution of the management board of mother company. Appointment of representative of the branch office is also necessary, and we need to register the branch in the National Card Register. The branch may act from the moment of registration in the card. However, limited liability can act a little bit earlier, because from the date of incorporation, limited liability has a special status called company in organization. I also prepared a summary of information related to two types of establishment of company, of limited liability company. One first way which is presented here is called S24 system. This is just to let you know, but if we have Polish citizens here on webinar as well, but for foreigners it is not so popular and we do not recommend it because the Polish website, governmental website, is in Polish language, and in order to establish such company, a person needs to have electronic signature or a PUAP. A PUAP is special kind of electronic signature, but in order to have a PUAP, you need to have PESEL number. So it's more dedicated to Polish citizens, at least at this initial stage. So in order to establish such company, which this system gives quite quick registration, because it's 24 means 24 hours. In practice, it's 2-3 days. So we sign articles of association, however, in limited scope, because the scope is the draft of such articles of association is on the website, on the governmental website. There must be paid contributions to share capital, which need to be made by shareholders only in cash. We are appointing management board, in some cases supervisory board. Here the registration looks like this, that we first register the company and we have 7 days to submit the confirmation to CARD that the contributions were made, which in practice means that we need to open bank account within 7 days and submit the confirmation of payment share capital to the CARD register, which in most cases, when we open bank account for foreign clients, is almost impossible to open bank account in 7 days. The second option is also electronical, via electronical portal. However, it's more like it is more for our foreign clients, because we are signing articles of association based on written power of attorney prepared abroad, apostilled and notarized. And we as a proxies, we go to the notary and sign articles of association, but we can agree here the full scope of the articles of association. We have no draft here. Then we may include here privileged voting rights, increase of share capital without changing of articles of association, for example. So this gives us wider scope of wording of such articles of association. Of course, the second step is opening a bank account and payment of share capital. So here we open bank account before registration in the card, just after signing articles of association. Then we pay contributions to share capital. We also appoint the management board in the first notarial deed when we sign articles of association. And we register the company in the card. What can we propose you if you would like to start your business quick? We have ready-made shelf companies. To save time and trouble, ready-made shelf companies are available for purchase within a couple of days. So we have companies established by us, which has no history. They are registered in the National Card Register. They have NIP number, which is tax number, REGON number, which is statistical number, VAT and VAT EU number, and also they have opened bank account with one of Polish banks. And the share capital is paid. Our shelf companies have minimum share capital in amount 5,000 PLN. So this is one way of starting business, which we recommend. If you need any support, you can also ask us directly after the webinar about more information. I will just add that this kind of sale can be done remotely. So you do not need to come to Poland in person. Another important obligation is ultimate beneficial owner registration. The Polish Anti-Money Laundering Act and Anti-Terrorist Financing Act introduced the Central Ultimate Beneficial Owner Register. I think that this kind of registers are actually in all EU countries. In Poland, we need to insert information about ultimate beneficial owner within 14 working days from the moment of entering the company into the National Card Register, or when we change some information about UBO, for example, when we sell the shares of the company, like the shares of the in our shelf company, then we have 14 working days from the change of information. I will add here two comments. One, that there is maximum fine for not filing UBO up to 1 million PLN. We did not have in our practice any fine given to our clients because sometimes the clients had delays. However, you should bear in mind that such fine is possible. And the second information which is important here is that such motion is signed only in electronic version and must be signed by board member, management board member. So here you cannot give us a proxy to sign such a motion to UBO register. And it must be signed by qualified electronic signature or a PUAP, but a PUAP, as I said, is mostly for Polish citizens available. So that's why it is important that when we start our conversations in relation to cooperation, we always say about the electronic signature because it will be needed for signing UBO registration after, quite quickly, yes, after we start cooperation. And a couple of words about opening a bank account. Generally, bank account is not necessary, but in practice, we do recommend to open bank account because when the company does not have bank account, it may cause many tax negative implications. So we assist in opening bank account to our clients, but I will just briefly tell you that limited liability companies should have active bank account when the parties of transactions are two entrepreneurs, so between two entrepreneurs, and also when the payment exceeds equivalent of PLN 15,000. This is important information for you. And also, in order to open a bank account, the bank conducts KYC procedure and verifies ultimate beneficial owner and client's group structure. There is also possibility to open bank account remotely without presence in Poland, but I will mention here that bank is checking very carefully each party within the group structure. So the bank is asking about the register excerpt, about shareholders structure, about share register, and in some cases, from my experience, I know that there are compliance departments within the client's group which have these documents in place and can quickly send it to us. The documents in general should not be older than 3 months. However, in some cases, when bank is asking about next documents, our clients need some time to gather such information and excerpts from many countries if the group structure is let's say complicated, yes, and quite big. So this is quite important information for you in this initial stage when you start your business. And a couple of words about employment in Poland. Employment of foreigners in Poland. EU EEA and Swiss citizens can work generally in Poland without a work permit. Entrepreneurs can also post employees being the citizens of these countries. Non-EU, EEA and Swiss citizens must have a work permit and residence permit. In Poland, the most popular way of employment is based on labor law, and the most popular contracts are employment contracts. The first one is probationary contract. This is the first contract when employer would like to check the employee, whether he will be appropriate person. And this contract can be signed up to 3 months and cannot be more than one when we have one employee. The next contract is fixed term contract, definite term employment contract. And here in total, there cannot be longer than 33 months. And total of such agreements cannot be more than 3. And later on, after this period, when we know the employee, in most cases, employers are signing employment contract for indefinite period of time, so permanent contract. There are differences in relation to termination of the contracts, but any additional or more detailed information can be also presented by our employment department. If you have questions, please write us these questions in email. Okay, so I think that my part is over. So now we will present accounting part, which will be run by Marta Cyganik, director at Crow.
Good morning, everyone. I would like to summarize few most important items regarding accounting and accounting regulations in Poland relating to business operations. Accounting regulations are based on Accounting Act, and according to this act, joint stock companies, limited liability companies, and branch offices are obliged to keep so-called full accounting records. Polish regulations are quite similar to international standards, but there are some differences that need to be sometimes reconciled. So in case our clients or potential clients have group records according to IFRS, we usually analyze the differences. As I said before, the regulations in Poland are quite similar, so there are not so many of them. The Polish regulations also require financial institutions to have the full accounting records, but also foundations, representation offices, and partnerships and entrepreneurs conducting business activity with a turnover higher than 2 million euro. What needs to be stressed here, and it's very important, is that the company is obliged to keep accounting records from so-called day one. So this is the date of articles of association, or in case of branches, a resolution that set up a branch. Polish accounting regulations also require that the company has records kept in Polish language and in Polish zlotys. And what is really important here and needs to be stressed is that the Polish the accounting system used for keeping the statutory accounting records has to be in line with Polish accounting and especially tax regulations. A few years ago, there were changes in Polish regulations that require right now from companies to provide to tax office so-called standard audit files for tax purposes. VAT file, for example, is required to be filed on a monthly basis, but the tax office may also require detailed file relating to all transactions recorded, and in most cases, systems that are not compliant with such regulations are not able to produce such files. And the time and the deadline when the company, when asked, needs to deliver the files is 7 working days, so this is usually quite short. So in case we get some questions whether it's possible to have records in some group systems, and then to answer the tax office requests quite quickly. Usually our answer is that it is not possible, and we usually recommend in such a case to have parallel ledgers or do some localizations of accounting systems that the groups use for management purposes. As to the reporting deadlines and statutory reporting, there is no interim reporting required regarding accounting regulations. Financial statements have to be prepared by the end of first quarter after the year end. So in case of companies that end its financial year in December, we had it in March. Another 6 months, another 3 months, there are to approve the financial statements and then to file the statements to the court. The Polish regulations require a specific format of financial statements. It has to be prepared in XML format in electronic form and signed by the board with the electronic trusted signature. Only one board member, in case there are more board members, have to sign, but other board members have to also sign a statement saying that everything is okay in the financial statements prepared. The audit obligation is not arising in the first year. In order to check whether the company is obliged to have a statutory audit, we have to check the financial statements prepared, and in case there are 2 out of 3 thresholds exceeded that are presented on the slide, the company has to find the local auditor and to conduct the statutory audit. And this regulation is in most cases applicable to limited liability companies because, for example, joint stock companies or banks or other financial institutions have to have the statutory audit each year. I already mentioned something before regarding the approval of financial statements. It has to be performed in the 6 months after the end of financial year. And then the financial statements have to be filed into court registration via document repository filing or S24 platform. As Ania already mentioned, it requires electronic signature, and we usually recommend that our clients have at least one signature that is provided by a local supplier, because other signatures acquired in European countries may have or may cause technical problems. So we usually recommend to have at least one board member has an electronic signature issued in Poland. Other reports that may be required from the companies include statistical office reporting. This can be required on a monthly, quarterly, or annually basis. The electronic filing is required, and the companies somehow pointed out by the statistical office. National Polish Bank reporting may be required in case the company has big foreign currency balances. It is also filed electronically and in most cases required on a quarterly basis. And in case the company keeps trading business and imports or exports goods between European countries, intrastat reporting may also be required. It depends on the thresholds once again, and it's required on a monthly basis, and electronic filing is also the method of filing. And I think this is, in the few words, I would say the basis. And right now Agata will tell you more about taxation in Poland. Thank you very much.
Thank you, Marta. Good morning, everyone. Taxation in Poland is quite a vast topic. Unfortunately, we don't have enough time to go through this in depth, but I will be very happy to give you just some highlights on this on the tax system in Poland. So to start, the main tax burden in Poland for business entities is corporate income tax, value-added tax, withholding tax, tax on civil law transactions, and real estate tax. To start with corporate income tax in Poland, this is an overview of the basic corporate income tax rate. So the standard CIT rate is 19%. It is also possible to enjoy a reduced tax rate amounting to 9%, but this may apply only to companies which have the status of a so-called small taxpayer or companies commencing their business in a given tax year. And this, the threshold to be viewed as a small company, as a small entrepreneur is 2 million euros in the previous year and in the given tax year. Due to the fact that this has to be converted to Polish currency, this amount is changing on annual basis. The amount in Polish złotych is changing. So once this threshold is exceeded, the taxpayer loses the right to use the 9% rate and switches to the 19% standard CIT rate. We also have a reduced rate of 5% that can be applied to intellectual property rights. So only the profits from selected intellectual property rights may be subject to this 5% tax. I will elaborate a little bit more further in this presentation on this topic. The maximum period for carrying forward tax losses is 5 years. The tax losses, they may be set off against future income, but only income derived from the same income source. The rule and after these 5 years, the tax loss, if it has not been deducted, it is ultimately lost. The rule on deduction is alternative. So we have two options. The loss may be utilized up to 50% in a given tax year. So the shortest period in this time, if we choose this option, is setting off the losses within 2 following consecutive tax years. Or we may choose the option of setting it off and using the loss in 1 year, and the limit of the loss that can be used is 5 million złotych. Then the remaining part may be used in the 5-year period following the year when it was incurred, but then it is limited to up to 50% in 1 tax year. Withholding tax in Poland. Well, this is the topic that's most interesting for international companies, especially group companies who are invoicing and charging their local entity in Poland with interest, royalties, management fees, know-how, and similar charges. So the standard withholding tax rate applicable in Poland is 20%. This applies to interest, royalties, management fees, know-how, some lease fees as well. The second standard local domestic withholding tax rate is 19%, and this one applies to dividends disbursed from Poland, apart from some other payments, but dividends is like the most important and the most popular one. Of course, under certain conditions, reduced tax rates of withholding tax or tax exemptions, they may be applied and claimed under the regulations. What is important is that Poland has implemented the parent subsidiary directive and the interest and royalties directive, which gives certain reductions under, of course, certain conditions to use a reduced tax rate. And we also use the tax rates, the tax rates or exemptions that are reduced by the double tax treaties that we have signed. Poland has signed over 80 double tax treaties. But for the past 2 years now, we have introduced in Poland the pay and refund procedure, which is applied to dividends, royalties, and interest payments in case a 2 million threshold is exceeded, in case of payments to related entities in a given tax year. This means that the tax needs to be withheld at source if this payment exceeds the threshold. So, of course, it is possible to apply for a refund and claim this tax back from the Polish tax authorities. However, this procedure is quite complex. It requires a lot of documentation, and it takes some time to get the refund by the foreign entity, because this is the foreign entity that is applying for this withholding tax refund. But we have had successful cases in this field, so I may assure you that this is doable, although complex and time-consuming, and requires gathering a lot of collecting and providing our tax authorities with a lot of documents or additional explanations. It is also possible upfront, before the payment is done, to apply for a special binding opinion showing that the entity in Poland is entitled and has examined with due diligence the right to apply the reduced tax rate or the exemption from withholding tax in Poland. So then it is necessary to file a special statement as well and show all the documents to receive this binding opinion. And it may be used against payments for certain sources. So, for instance, you may apply for interest, royalties, or any payments that will be made disbursed from the Polish entity. However, it needs to mention specifically the payments that are to be done. We also have a possibility to file a statement showing that this is an option to this binding tax opinion, showing that the Polish entity as the payer has gathered and collected all the documents and takes the accountability for especially the beneficial owner of the fees that are subject to withholding tax in Poland. And then the potential negative consequences are with the Polish entity, with the Polish payer, for withholding a lower tax rate or not withholding tax based on the exemption regulations at all. So this is quite complex, but this was introduced to make sure that, for instance, if we have pass-through entities and some vehicles created specifically to avoid withholding taxation, then to make sure that this withholding tax is really paid in Poland, and in that case, it would not be reimbursed to the applying entity. Another new regulation is tax on shifted profits. Tax on shifted profits, it was introduced in Poland in 2022. The first year when it was used, when it was paid, was 2023, because this tax is declared and paid along with the annual CIT return, so 3 months after the tax year end of the entity. And this tax was introduced to prevent the erosion of the tax base and profit shifting to other jurisdictions. Basically, this tax applies, and not the tax, but the regulations apply to entities who are related and for very specific profits. And as you may see, the profits are not only, so the charges are not only regarded like passive income, but it's also advisory services, guarantees, warranties, management fees, market research, transfer of the risk of insolvency of the debtor, or the fees for the transfer of functions, assets, or risks, which are called altogether exit fees. This is mostly for transfer pricing purposes. The tax on shifted profits, the rules, they require the tax to be paid in Poland in the case where a Polish entity bears costs that are just listed on this slide. So advisory fees, royalty fees, interest, debt financing, etc. If the total amount of the costs incurred by the Polish entity is at least 3% of all the deductible expenses of that Polish entity, then these regulations come into force. However, in some cases, they might not apply because they will be exempt if the entity to whom the payment was made is subject to income tax in the European Union or the European Economic Area and carries out substantial real economic activity in that country. So then these regulations, although this 3% threshold will be exceeded, these regulations will not apply. Otherwise, this tax may apply in case the tax that will be paid by the entity receiving these profits will be lower than 14.25% of taxation. This rate is it might seem quite bizarre, but it is a result of the way that the difference in taxation is calculated and in the Polish tax regulations. So if the difference, if the tax is lower than 14.25, and the very specific conditions are met, and there is no substantial business activity, or the payment is done it was made to a pass-through entity, then it is very likely that the tax would be due in Poland, and the rate would be 19%. This is a very complex regulation. And I looked before our webinar. I checked the statistics just to give you an idea of how many entities have really been forced to pay this tax in Poland. And it appears that in 2023, which was the first year, as I mentioned, only 14 entities had to effectively pay this tax on shifted profits in Poland. And the amount of tax collected additionally by the tax authorities based on these regulations was 4.9 million Polish złotych. So this shows that this tax, in most cases, it doesn't apply. And the amount that was additionally collected of tax, the amount of tax was not as high as probably expected by the tax authorities. The second tax is value-added tax, which is generally is following the VAT system from the European Union VAT directives. So the basic rules and the general standards, let's say, to VAT, they are very similar to the ones used in other European Union countries. The basic tax rate, VAT rate, that applies is 23%. We have, of course, reduced tax rates, reduced to 8%, 5%, and there is a 0% rate as well, applied to some services and supplies. Of course, most services provided to non-Polish companies are not subject to VAT in Poland. The same for supply of goods, because we use also the model of intra-community supplies, intra-community acquisitions, where the reverse charge mechanism applies. And one of the interesting options, or maybe not options, but requirements even in Poland, is the split payment system and the VAT sub-account. My colleagues already mentioned the bank accounts, but in Poland, when you open a bank account for a company, for a business entity, the bank automatically opens a sub-account that is called the VAT account, and this is for the purposes of the split payment mechanism. Split payment mechanism is introduced and is obligatory in the case where we have a B2B transaction. So this is only for B2B payments. So when we have a B2B transaction of the value exceeding 15,000 złotych, Polish złotych, and if this transaction covers goods or services that are listed in the appendix to the VAT Act. This is quite a long list. I will just give you an overview of what kind of services and goods are on that list. So this split payment will apply. These are specifically very sensitive goods, so-called sensitive goods. So these are fuels, steel products, copper products, hard disks, laptops and computers, aluminium, mobile phones, integrated circuits, and when it comes to services, that's the construction services as such. They are subject to split payment. Split payment means that when the payment is done, it is actually automatically split. It should be automatically split to two bank accounts. So the net amount goes to the regular bank account of the service provider or the goods supplier, and the VAT amounts goes to the sub-account, the VAT sub-account. So the VAT sub-account, it can't be freely used by the owner of this account, so by the service provider or goods supplier. This can only be used to set off or to pay other taxes, other VAT liabilities, to pay to the Social Security Office, so for Social Security contributions, PIT, personal income tax advances that are due by the employer, customs duties, excise duties, and some more public charges. And this can be freely used to make these payments, but the amounts that are gathered on this account, they may not be used for some other purposes. Of course, it is possible as well to use it to pay our suppliers with the split payment method. So then we use we pay the net amount from the regular account, and we use the VAT account to pay the VAT to the split payment for the split payment services to our supplier. If this amount, and it happens quite often, if this amount is quite high, so it cannot be used in a short time, it is possible to apply for a refund for this, for the release, maybe not refund, for release of this amount from this VAT account. But the tax office has the regular deadline is 60 days for this refund, but we are also applying for such release of payments, and we know that it works. However, we need to provide documents and statements showing that we are entitled to this refund, and there is no fraud behind our business. So this is I believe this is quite specific for Poland. So now let's move on to this other tax, which is tax on civil law transactions. This is a tax that is used usually in case of non-B2B or VAT exempt transactions. So, for instance, the sale of real property is subject to 2% tax, and this tax is levied on the market value. So what's important is the market value of the property, not the contractual value. So if the contractual value is underestimated, the tax authorities will investigate and levy this tax on the market value of the property subject to sale. 1% of tax applies to share of sale. Loan agreements are subject to 0.5 tax on civil law transactions. However, in case of loans that are granted by shareholders or entities who have in their business activity granting loans, so this is one of the scope of their activity, or this loan is granted abroad, then this 0.5% tax will not apply on loan agreement. So it's quite common that in case of financing through either by a foreign entity or by the shareholder, there is no tax. It's exempt from tax from this 0.5 tax. What else is important? It's worth noticing that this 0.5% of tax also applies to the share capital that is injected in a company or a partnership and the change of articles of association. And then this tax is levied on the value of the share capital or of the increase of the share capital. Moving on, we get to personal income tax in Poland. The standard rates are progressive. It's 12% up to 120,000 złotych earned in a given tax year. And above, that's 32%. So 32% is calculated only on the difference between the income and the 120,000 złotych. There is also an additional tax burden for individuals whose earnings exceed 1 million złotych per year, which is approximately 230,000 euros. Then there is an additional solidarity tax, the so-called solidarity tax, of 4% on the surplus of income over 1 million złotych. So it's worth knowing that in case of very high earnings, this tax may apply. When it comes to business taxation, individual business taxation, a person carrying out business activity, so-called sole trader, has three options. The person may choose to use the tax scale, so the 12 and 32% tax scale, may choose to use the flat rate tax of 19%, or a lump sum on registered income. I will elaborate on this in a moment, showing you the lump sum tax on registered income. The lump sum is paid on business income, so it is paid on the proceeds from the business activity, but then the entity, the individual, is not entitled to reduce this by any type of tax deductible costs, for instance, for the fees or costs for buying any assets that are required to run this business activity, or any services that this person is buying or are needed to provide services. The tax rate applied depends on the type of business carried out by that entity And so you have the tax rates listed here, and the most popular tax rates used at the moment, that's 17, 15, and 12%. And 12% is mostly used by IT developers, software developers in Poland, and that's quite a popular tax regime to be chosen. As I mentioned, business income of a sole trader or derived by a partnership, they may opt for a flat tax rate, for a flat tax rate, and then they are entitled to treat expenses as tax-deductible costs. The Polish system requires that in case of personal income tax, advance payments are made by the 20th day of the following month, and the annual tax return should be filed by the end of April of the following year. I didn't mention it during the CIT description, but also for CIT purposes, the CIT advance payments have to be made by the 20th day of the following month, and the annual tax return should be filed within 3 months from the end of the tax year. We have some interesting tax reliefs in Poland. One of them is IP box, which is the tax regime that is used to income derived from intellectual property rights. This preferential tax rate is 5%. But the IP right must be created, developed, or improved by the taxpayer as part of his research and development activity. And the qualified income rights, they are listed in the tax regulations. And one of the most interesting and most common one is the last bullet point on this slide, protected rights to software. So IP rights must be protected until under the local jurisdiction or ratified international agreements to be treated as qualifying IP rights for this 5% rate. And income from qualifying IP rights that may use this 5% tax rate, these are fees and royalties received for this right under a license agreement, sale of such an IP right. They may be included in the sales price of products or services, and then this part of the price will also be eligible for a 5% taxation, or compensation that is related to one of the qualifying IP rights. I can see that we are running out of time, but we still have just a couple of one more tax relief to discuss. So the other one, which is quite interesting, is the research and development tax relief. Also in this case, the qualifying intellectual property rights are somehow described in the regulations, and this relief may be applied only to R&D activities that are understood as creative activity that involves research or development, which is undertaken in a very systematic manner. And the aim of this research and development is to either increase the knowledge resources or to increase and use these resources to create new applications. This R&D tax relief, it allows to deduct the eligible costs incurred in double. So, for instance, if we have employment related fees, charges like salaries that we pay to our employees, we may deduct 200% of these eligible costs incurred for R&D services, R&D activities. And in case of, let's say, some other regular expenses linked to R&D activities, which can be depreciation write-offs, linked to R&D related assets, license fees, costs of some R&D services that were bought from an officially listed entity as an R&D center. They may be also deducted, let's say, twice. So effectively, in practice, every 100,000 złotych spent on R&D activities, it may give us a saving, a tax saving, either of 19,000 or 38,000 złotych, because we can deduct it we can deduct once again 19% of that, or of the costs, or 38% of the costs incurred. The qualifying intellectual property rights, they include salaries, social security contributions, unemployment and mandate contracts. This is important to note that B2B contracts, they don't apply. They don't qualify for R&D, for this R&D relief. So this is quite important to plan the model of employment if we would like to enjoy this R&D relief. Cost of purchasing materials related to R&D activity, specialist R&D equipment, expert opinions, advisory services, or equivalent services. These are the costs of which we can which we can deduct in double for the purposes of R&D relief. Of course, the R&D relief requires a lot of documentation and procedures that need to be implemented in the company. But it is quite common now that our clients apply for individual binding tax rulings that confirm the eligibility to enjoy this tax relief. Well, this would be very interesting to go into more details, but we just ran out of time. So if you would have any additional questions on tax reliefs in Poland or on what has been said, we will be very happy to address them. If you have any questions, you may simply also use this link, contact us, in this presentation that you are seeing at the moment. But let me guide you how we can help you in running your business in Poland. First of all, we will be very happy to help you in setting up a business in Poland and running the business in Poland. So as Anna mentioned, setting up the business in Poland, this is either setting the business from scratch or buying a shelf company with all the registrations needed in the bank accounts, opening registrations in the CRBR register, starting up and running operations, which is support in employment of employees. Our legal department may support you in any contracts needed, registration of the employees for social insurance. We provide accounting services, HR and payroll services, constant tax advisory services, corporate secretarial services, compliance, and GDPR services. So for the moment, this is all from us. If you have any additional questions to our experts, please let us know in which areas you would need assistance. Thank you very much for participating in our webinar today and for your questions. As previously announced, we will provide you with the recording of this event. Feel free to contact us if you have any questions. Thank you very much for today.